Hey guys, it is Julie here with TipRanks. Today we're taking a look at two stocks recently scooped up by billionaire Ken Fisher. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two companies that have not only been bought up by Ken Fisher's hedge fund, but also come in with a strong buy consensus from Wall Street. So we're going to take a look at what it is that these companies do, and of course what those analysts are predicting for the stock's future. Just before we get into that, this is a reminder to check out the TipRanks newsletter center. Here you'll find both the Smart Investor and Dividend newsletter, each coming out weekly with some really great unique insights. So follow the links in the description down below to check those out. Now let's get right into these recent billionaire bought stocks. First on the list today, we have BlackRock. Their stock trades under the ticker BLK and is priced at $690 per share. And yes, that isn't cheap, but don't forget that fractional shares do exist. Now, over the past year, they're down 5.8% and a few percent in the last 6 months. But in the last 3 months, they've seen gains of 8%. Their stock also pays a quarterly dividend of $5 per share for a current dividend yield of 2.84%. Their next ex-dividend date is coming up on September 7th. BlackRock is a multinational investment firm, and with more than $9.4 trillion in assets under management, they're actually the world's largest asset manager. With their vast array of investment offerings and financial services, BlackRock operates on a global scale, boasting 70 offices across 30 different countries with customers in 100 countries. They're renowned for their expertise in risk management, innovative investment strategies, and utilization of technology to enhance their financial services. The investment giant did report their latest quarterly earnings last month on July 14th, and they came out with a solid earnings beat. For their Q2, they had earnings per share of $9.28, coming in well ahead of the $8.52 expected. Revenue did come in at $4.46 billion, and that was a 1% decrease year over year, but did meet analyst estimates. They also saw $80 billion of quarterly total net inflows, reflecting their continued strength of broad-based platform with positive flows across client types and regions. Fisher's firm increased their holdings in BlackRock by 6%, purchasing over 92,000 shares, bringing their total investment in BlackRock to about $1.33 billion. Overall, the BlackRock stock does come in as a strong buy, and one of the analysts weighing in on the stock is from Morgan Stanley. They noted BlackRock's breadth of capabilities, unrivaled distribution prowess, and top brand uniquely position the firm to capture key growth zones over the next several years. This should result in the firm's $9 trillion of assets under management to expand to $10 trillion in the next few quarters, even surpassing the $15 trillion mark in 5 years. Currently, their company has 9 buy ratings and just 1 hold. And that strong buy rating comes with an average price target of $817, which would be an upside potential of 18.5% for the next 12 months. Looking down below here, we do have that 1 hold rating from UBS, but it does still have an upside of nearly 13%. On the low end, we have a buy rating from JP Morgan with an upside of over 8% and a high-end price target coming in last night from Bank of America with an upside of 33%. And the second company that Ken Fisher's firm has increased their position in is UnitedHealth. Their stock trades under the ticker UNH and is currently priced at $512 per share. Now, over the past year, they are down about 4.5%, but you can see they've taken a couple jumps up and are up 4.8% in the past 6 months. Their stock also pays a quarterly dividend of $1.88 per share for a current dividend yield of 1.34%. UnitedHealth is a diversified healthcare organization. They boast a substantial presence both nationally and globally, and is composed of 2 primary business segments. They're United Healthcare and Optum. United Healthcare is a major health insurance provider that offers a range of health coverage options for individuals, families, and businesses. This segment is responsible for the majority of their revenues. Optum, on the other hand, focuses on delivering innovative healthcare solutions, technology-enabled services, and data analytics to optimize healthcare delivery and improve outcomes. And their operations are huge. They're actually the largest healthcare firm by revenue, generating $324 billion in revenue last year. And they just came out with an earnings beat in their most recent quarter on July 14th. For their Q2, they saw earnings per share of $6.14, coming in 15 cents ahead of analysts' expectations. Revenue came in at $92.9 billion, growing 16% year over year, and they had cash flow from operations of $11 billion. Ken Fisher's firm purchased over 1.5 million shares of UnitedHealth, bringing the total value of their investment in the company to about $800 million. One analyst that recently weighed in on the stock was from Raymond James. They noted that even amid a challenging utilization backdrop, UNH managed to grind out another beat and raise quarter, albeit with the help of the trio of investment income, cost improvements, and buybacks. We believe UNH effectively reset expectations in June, and conservative 2024 bids offer potential upside. The UnitedHealth stock currently has 19 analyst ratings, coming in with 17 buys and just 2 holds. And an average price target of nearly $575 would be an upside potential of 12% for the next year. Looking down below, our most recent ratings coming in just this week range from 9 to 14%. On the low end, we do have a hold rating with an upside of 1.5 and a high-end upside of over 26%. So there we have 2 strong buy stocks recently scooped up by billionaire Ken Fisher. Let me know your thoughts in the comments down below and what you think of these companies' future growth potential. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you're doing your own research and due diligence and sticking to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.